Hey there folks, welcome to Wall Street Mojo's investment banking tutorial.
Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon.
And the topic is sum of the parts valuation. Now, sum of the parts valuation is typically used for companies which have got diversified businesses, which you cannot value using DCF or a single relative valuation technique. So typically if you look at a conglomerate like Johnson & Johnson or Walt Disney, these are the kind of companies wherein SOTP would make sense. So typically what happens is different parts of the business are valued differently, and then they are all summed up with the cash, so to arrive at the final number. Alright, so this is what the whole technique of SOTP is, and we can just look at the explanation, as in what needs to be ascertained here while doing SOTP. So if you look at an hypothetical example here, Mojo Corp, it consists of different segments like bank, e-commerce, software, oil and gas, and automobiles. And these segments or these individual businesses cannot be combined and valued. So in a way we will separately value them, because banks cannot be valued, typically they are not valued using a DCF that is used in automobile or oil and gas or such capital intensive businesses. So banks would be valued on price to book value or such multiples. So SOTP valuation of Mojo Corp, so this company, different segments of the company, like what I've said. So automobile would be valued using the EV by EBITDA multiple, or the EV multiple, or the PE ratios. Oil and gas can be valued using the EV or EV by BOE, which is barrels of oil equivalent. These are the kind of multiples which will be used in oil and gas. Then software is again PE, and the banking would be price to book value. So, and then again the e-commerce segment is EV by sales. So these are the kind of different multiples which one can use for valuing different businesses, and then all of the values can be summed up. So here the sum of the parts valuation for ITC is Indian Tobacco Company, has been inundated, and you can look at the values here down. So these are the kind of businesses which ITC is into: FMCG and other businesses. So FMCG consists of cigarettes and other brands, and then other businesses is hotels, agricultural, agribusiness, paper packaging, and others. So under these boxes, you would see the overall sales percentage and the EBIT percentage of all the businesses. Alright, so sales for cigarettes is 65%, while for hotels it is just 8%. So the revenue in terms, so hotels contribute just 8% of the overall revenue, while cigarettes contributes 65% of the overall revenue. So the emphasis here would be always on cigarettes. That's the basic core business of the company. Alright, so here if you come down, you would see the relative valuation done, the comparables company done for the company, and the peer group analysis for the multiples for different global players as well as the Indian players. Alright, and then here down you would see the overall multiples and the values and the target values and the price of that particular segment, which just price per, which this is just price per share, and this sums up to the overall price. So ITC valuation per share is 187, and this is coming out from the sum of all of these different segments, which are ascertained by the multiples of comparable companies listed in India and abroad. Alright, so this is one huge exercise, when you talk about SOTP. And please remember that this is typically done with respect to the conglomerates, alright, and or big businesses which have got multiple segments running into different streams. And then it would make sense to do the SOTP analysis. Alright, and if you come down here, you would see the waterfall for the ITC, which we have just discussed. So if you look at the waterfall chart, you would see that FMCG cigarette is contributing the most, which is like almost 65+%, of 187. Now, and on the other hand, hotels, FMCG, non-cigarette, paper packaging and agriculture, and the cash per share, these are just there. So to sum up, I would say that conglomerates needs SOTP, so different kind of segments cannot be clubbed together, and a DCF or a simple EV by EBITDA multiple, would not do. So there you would need SOTP. Alright. Now, how you can calculate SOTP, or how SOTP can be ascertained with respect to a biotech or a pharma company. So when you talk about biotech, the concept is going to be the same, just that in the biotech we will be doing the valuation of different drugs and which are in pipeline, and also the ones which are commercial, and then we will add them together, like what we did in the previous video for SOTP, and for a conglomerate basically. So now let's look at this particular company here, Radius Pharmaceutical, and if you see, there's something called products, and then there's something called pipeline. Alright, now it says products, and let's go and try to figure out how many products are there. So there's one product called time loss. Alright, so there's this product which we can value. Then there's another thing called pipeline. So let's look at what all products are there in the pipeline. So there is abaloparatide SC, abaloparatide patch, and then elacetrant RAD1901 and RAD140. So these are the pipeline candidates. So these are not giving the revenue as of now, but we can still go ahead and value them, and then the overall value of these individual drugs can be summed up to get the SOTP. So this is the SOTP for biotech. So biotech, in a biotech setup, there is nothing called different businesses. So it is why I've picked up this company, is because it is easier to understand in this respect, because it has got small drugs which can be thought of as different business segments. So let's just do one thing, open the Excel and try to figure out what can be taken. So in the products, usually I'll just take time loss because there's only one product, and coming back to pipeline, I can take I can just copy it, then elacetrant and RAD140. Now for each of this, what can be ascertained is the net value of each of these items. So how would I do that? So basically what can I do is like what we do in the DCF, we can create income statements related to the different products. I'll just call them products here. I'll not confuse them anymore. So these are the, or let's say the business segments. So these are the business segments. Now what I'm going to do is I will independently create, the income statement for these products and do the DCF of each of them. All right. So once I'll be done with all of that, what I'll be left with is the sum of NPV for the projected years and terminal value. And if we sum them up, that's going to give us the net value. All right. And this is going to be the case for each one of these candidates. So let me just indent them. So this is for this, and let me also color code them. So this is first color, and this is second. Let's say this is third, fourth, and fifth, the final one. All right. Now what I'm going to do is I'll copy this across. All right. And in the end, I'm going to take the cash. So whatever the value I get here, so net value for time loss. So whatever the value I get, let's say I get the value as 450. So this has to be divided by the number of shares outstanding to arrive at the per share value. So, and let's say the number of shares outstanding is, and this is by the way 450 million, and the number of shares outstanding is, let's say, I don't know, 10 million. So this by this, and this is a hypothetical example. So this is the final value of time loss for per share value. All right, so this segment is valued at $45 per share. Now in the same way, we can just hypothetically assume different values of other segments. All right, so let's say 250, and the value of this is going to be this by the number of shares outstanding. Again, net value for abaloparatide patch is, let's say, 300 million, and for this one, let's say 600 million, and for this one, let's say 650 million. All right, now the overall value is going to be I should have put in the dollar sign there. Anyways, I'll just put it. Yeah. So as you can see, we have achieved at the value. We have arrived at the value. So these values, can be summed up to get the value for SOTP. I'll just do it here. So the value for SOTP is going to be, so this plus this plus this plus this, and the final one here, this. And yeah, we also have to include the cash value. So cash value, let's say the company is not having any cash, so the overall value is going to be this, so $225 per share. Now if the stock price of this particular company is trading at less than this, then you can put in your buck, and if it is more than this, then it is overvalued. So that's up to you, but to give you an idea, that's how the SOTP will function. All right.
So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.